1.13 USD plus 0.020 or a solid 1.80% move to the green intraday. That is the number flashing on the screen right now for Strive Inc., ticker symbol ASST. If you are looking at the chart, you might see a jagged line that looks like it is trying to find its footing, bouncing between the $0.05 and $0.14 range today. Most investors, especially those sticking to the safe lanes of Apple stock or Tesla stock, would look at a price tag of $1.13 and immediately keep scrolling. The assumption, the expectation, is that anything trading at this level is just noise, a penny stock, a lottery ticket, something you throw $50 at on the Robinhood app just to see what happens, alongside your Robinhood crypto holdings. But here is the reality that almost everyone is missing while they are too busy staring at Nvidia stock hitting new highs. Strive Inc. is not just some random small-cap company trying to sell marketing services anymore. The market narrative expects this to be asset entities, the old company name, a firm that managed Discord communities. But the reality is that this ticker, ASST, is effectively morphing into a junior MicroStrategy. It's a Bitcoin Treasury play disguised as a penny stock. And if you are not paying attention to the corporate restructuring and the massive balance sheet pivot happening right now, you are looking at the wrong numbers. We need to sit down and really pick this apart, because the gap between what the average person thinks this stock is and what the filings say it is becoming is wide enough to drive a truck through. Let's back up for a second. When you think about online investing, you usually think about buying a nice, diversified basket of goods. You go to Fidelity, maybe look at Fidelity mutual funds or Fidelity ETFs. You might even use Schwab Intelligent Portfolios or a SoFi robo-advisor to automate the whole boring process. That is the smart way to invest online. It's safe, it's predictable. Strive Inc. is the exact opposite of that. This is for the person doing self-investing who wants to take a concentrated, high-conviction bet on a specific macro thesis. The thesis here is simple. The dollar is diluting, and Bitcoin is the new reserve asset. We know Michael Saylor and MicroStrategy proved this model works for large caps. But what Strive Inc. is doing is bringing that Bitcoin Treasury model down to the small cap level, making it accessible for the retail crowd on Robinhood stock trading or SoFi Invest. When you look at the recent movement, up 1.80% today to $1.13, that price action is not just random noise. It's the market trying to calculate net asset value, or NAV. Recently, news broke regarding the merger between asset entities and Strive Enterprises. This was not just a name change, it was a fundamental change in the DNA of the company. Reports indicate that through this merger and subsequent acquisitions, the company is targeting a massive Bitcoin holding. Some filings and analysis suggest holdings that could arguably justify a market cap significantly higher than where it traded just months ago. The volatility we're seeing, the swings from 90 cents to $1.40 and back to $1.13, is the market trying to price in exactly how many Bitcoin per share this company actually holds. Think about how you use interactive brokers. You might check the Interactive Brokers trading interface to see the bid-ask spread. On a stock like ASST, that spread can be wide. Why? Because liquidity is lower than Tesla stock. But that volatility is where the opportunity lives. While the algorithms at Fidelity Wealth Management are busy buying bonds, the traders on the Interactive Brokers platform are watching these 13G filings to see who's buying. And who's buying? High-profile names have been attached to the Strive brand, most notably Vivek Ramaswamy, whose firm Strive Asset Management has been making waves with its anti-ESG stance. While this entity, ASST, is distinct, the brand alignment and the strategic backers suggest this isn't just a garage startup. Now, let's look at the old business versus the new business, because this is where the investment case gets tricky. Originally, this company, under the Asset Entities banner, was all about Gen Z. They built servers on Discord, they managed communities for influencers, they were a digital marketing play. And to be honest, that business model is fine, but it's not explosive. It's a service business. It scales linearly. If you want more revenue, you need more staff. The new Strive Inc. is a financial holding company. They're likely keeping the digital community aspect because, let's be honest, having an army of retail investors on Discord is a powerful tool for a public company. But the core asset is shifting to the balance sheet. They're raising capital, likely through Fidelity brokerage accounts or Interactive Brokers stock trading desks, to buy hard assets. This brings us to a critical concept, the Bitcoin premium. We've seen with other companies that if they hold $100 million in Bitcoin, the market might value them at $150 million or $200 million. Why? Because investors want exposure to Bitcoin in their stock portfolios, maybe inside Fidelity IRAs where they can't easily hold raw crypto, and they are willing to pay a premium for a company that actively manages that stack. Strive Inc. at $1.13 is essentially an option on this premium developing. If you're sitting there with your Robinhood cash management account wondering if you should deploy capital here, you have to ask yourself, do I believe Bitcoin is going higher? Because ASST is now tethered to that mast. If Bitcoin drops 20%, this stock probably drops 40% because of the implied leverage. But if Bitcoin breaks $100,000, a small cap stock with a small float like this could see moves that make Nvidia stock look boring. Let's talk about the specific intraday action we're seeing right now, $1.13. The volume has been spiking recently. When you see volume spikes on a flat or slightly up day, that's often accumulation. It means someone is soaking up the supply from bored retail investors who are tired of holding. You might see this activity clearly if you use the Fidelity trading platform or the Thinkorswim tools. The big players, the ones using Interactive Brokers account structures for institutional size, don't buy everything at once. They buy in chunks. $1.13 is a key level because it's holding above the psychological $1 mark. If it breaks below $1, it enters listing compliance danger territory on the NASDAQ. Keeping it above $1 is vital for the company to remain marginable on platforms like SoFi Active Investing or Robinhood Investments. I want to pause here and ask you a serious question about your own portfolio. Comment below how many shares of Strive Inc. ASST you currently hold, or if you are waiting for a dip below $1 to enter. I want to see where the sentiment is. Are you guys bullish on the Bitcoin pivot, or do you miss the old marketing business? Now, let's strip away the heap and look at the risks, because investment help sites often gloss over this. This is a small-cap company. The spread on Robinhood fractional shares might not even apply here because the price is so low. You usually have to buy whole shares. The liquidity risk is real. If the market turns on crypto, getting out of a position in ASST at $1.13 might be hard. The next bid might be $1.05. You don't have the deep liquidity of Apple stock. Furthermore, the pivot to a Bitcoin Treasury is capital intensive. They need money to buy Bitcoin. Where does that money come from? Dilution. They might issue more shares. They might sell convertible notes. This is standard operating procedure for growth companies, but it means your slice of the pie gets smaller unless the value of the pie, the Bitcoin, grows faster than the slice shrinking. You need to watch the filings for at-the-market offerings, ATM offerings. If you see them dumping shares to raise cash, the price will face headwinds. This is why using investing sites that track SEC filings is crucial for individual brokerage management. You cannot just buy this and forget it like a Fidelity Mutual Funds index. You have to babysit it. However, the expectation versus reality tension I mentioned earlier is the strongest bullish argument. The expectation is that ASST is a dead money marketing firm. The reality is a leveraged bet on the future of finance, backed by a brand, Strive, that has serious political and financial clout in the current U.S. ecosystem.